Hello there, Maverick traders. It is June 6th, and I gotta say, not a whole lot happened today, so I'm going to move through this pretty quick and get right into some potential trades. In this session, we're going to be talking about what happened today, a little bit of the news. We're going to jump into the market and take a look at the technicals, and then we're going to identify the strongest, weakest sectors and find some trades inside there.
Disclaimer: this video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As I said earlier, not a whole lot happened today, so let's look at a little bit of the news. So on Wednesday, we got the Bank of Canada as the first G7 country to cut interest rates by a quarter point, and the ECB this morning followed suit. So look, this tells me that when one of the central banks around the world starts to cut, it's kind of a cascading effect, and it really is giving the Fed a reason to actually make a cut. I've been skeptical this whole year that the Fed is going to cut interest rates. I actually think it is likely to happen. When? Not sure, but it is more likely to happen now than it was just a couple of weeks ago. Quiet day in the markets. We're going to take a look at the charts. Markets traded in a really tight range today. If we take at the performance, look at the performance. I mean, this is just as flat could be. We are in a very tight range. The Russell continues to underperform, down almost 1%. Oil had a little bit of a bounce back. Gold a decent day. The market internals, 50-50. Look, this was a total consolidation day, and there's not a whole lot to talk about. If we take a look at where we are in the charts, we broke out to new highs yesterday, and this is a really strong candle today. We actually opened up about where we closed. We had a tiny little bit of a sell-off, and then you can see recovered. This is a very, very common candle to see after an expanded range candle. I'm going to go back to this one here. This is what's called a harami pattern. Whenever you see an expanded range candle, a big candle, you're going to see that the next candle likely trades in the upper half if it's a green candle, in the lower half if it's a red candle. This is very, very common when you see a big move that has a lot of energy to it, just to have some consolidation. Today's candle means absolutely nothing. Tomorrow's candle, after harami, kind of does tell you the direction that it's likely to head. If we take a look at the NASDAQ is super strong. Very, very similar pattern here. Big breakout, close on the high. We gapped up a little bit, pull back. Just a really, really tight candle. Very tight candles, pretty much telling you that this market is not ready to sell off. It wants to go higher. There's nothing in this heat map that tells you anything of note. Okay, I guess there's one thing we could pick on: utilities. Utilities have been a leader. They are no longer a leader. We're seeing some actual selling hit the utility sector after a really, really strong last couple of months of buying. But other than that, there's really nothing in this sector analysis that we can use to help us out whatsoever. Did the market change? No, it's a +3. It was a +3 yesterday. It's a +3 today. This market is breaking out to new all-time highs. That makes it a +3 bullish market. I've got 2 trades for you on the bullish side and 1 trade on the bearish side. Now, I got to say, I didn't find a ton of great setups, and this is always telling me whether my market analysis is right. I'm bullish. I'm bullish, and I said last week that I didn't think the market was ready to make a new high yet. I said I thought this week was going to be more of a consolidation week. I was wrong. Markets did make a new high, but when I go in and take a look at individual stocks, I got to say I didn't see a ton of bullish setups that I'd like, which tells me, kind of confirms to me, I don't think we're really ready to rip higher here. I think it's going to be more of a slow grind than a rip. But look, I've been wrong thousands of times now in my 27-year career. One more is not going to bother me whatsoever. So let's take a look at 2 bulls and a bear. First one up, Bitcoin. Now look, I am not a crypto guy. And in fact, I was a crypto skeptic for a very, very long time until about 2019 when my kids got a little older and I was hanging out with my nieces and nephews who were all, millennials in their 20s and 30s. And that's all that they wanted to invest in. That's what they were putting their money in. And I'm thinking like, well, this is dumb. This is fake money. But I realized that as the old people die off who don't believe it's real money, and the new people get into positions of power that do believe it's new money, then it's money. I mean, the dollar bills in our wallets, they don't mean anything. They're pieces of paper. The only reason they have value is because everyone around us believes they have value. We are definitely to a point where a huge percentage of the population believes that this is real money, and now Wall Street has embraced it. It's a totally separate asset class. We've got ETFs for it. I'm telling you, if you are a skeptic, you've got to get on board because it is here to stay. It doesn't mean you have to buy it, but you can no longer be a grump about it. You now have to be at least sort of positive. I did a little bit longer chart here because I really want to show you the consolidation of Bitcoin. So this marks 71,000 on Bitcoin, 72,000. And you can see we came up here, touched it a few times. We're coming up here. And I tell you what, crypto really wants to break higher. We have consolidated for a long, long period of time. I think crypto is ready to break out higher. You could also take a look at Robinhood. You could also take a look at Coinbase. I talked about Coinbase 2 weeks ago, and I see a lot of our traders are already in Coinbase and enjoying the nice run. So for me, I like Bitcoin to the upside. I like it here. You could also look at the Ethereum trust as well. Next up, Dutch Bros. Dutch Bros had a really big earnings report. As you can see, had a big jump and a run. Again, breakaway gaps are telling you that people were not ready for this news. The fact that it jumps up, 20%, and then the next day people are buying it, and then the next day after that it jumps up even more and people are still buying it, that's telling you that this story, whatever happened here on this earnings report, was a major, major deal. We had a huge run. We got our pullback. You can see here we had 2 days up, a couple days down, but here we've got a nice solid run to the top here. Is it ready to break out and run any higher? I don't know. But do I like this, holding this area, holding this $39 area? I do. For me, diagonal call spreads, longer dated vertical spreads to me make a whole lot of sense. Like a 38.40, go out a week or two. I think this is going to be a really good trade, maybe even 3 weeks. Give yourself a little time that if we do back off and come back down into this area, we do have some good positive things working here with an upper trend line. When it comes back down into it, it could be an ascending triangle. We have no idea, but just give yourself some time. I like this one to the upside as well. And on the short side, Lee Automotive. Now, these are my favorite trades. I really love these trades. I call them the March of Death. When there are stocks that just are going down and down and down and down and down, and nothing will help them. No amount of a bull market gets them any help. Now, I'd love to get into these off of bear rallies. I love it because, again, look at this. 23 up to 30. That's a nice, juicy 28, 30% rally to short into. But low bases can also be really good entry points on these because they either get a big rally higher or they go sideways for a while and then break down. I like this one down to 18. Pretty aggressive short right now in a +3 market. If you don't want to go to 18, just do a 19.20. A 19.20 is a very, very reasonable trade here on a very weak stock. It's likely going to drop. Maybe the market holds it up. If the market has a sell-off at all, this thing's likely going to tumble. So I do like this one, Lee Automotive, on the short side with just a pretty basic bear put spread. Let's talk about tomorrow. Tomorrow is the first, actually it's the second Friday of the month, but because the first Friday of the month was the first, we get the employment report. This is going to be a pretty big one. I think everyone is really excited for a rate cut now. I think for about a month ago, people are like, hey, we're probably not going to get rate cuts. The 10-year bond has come down to like 4.3. I think it's under 4.3. I think it's like 4.28%. that's a really low level. People are getting excited about rate cuts again. This payrolls report, if it's soft, I think the rate cut could come in the next meeting or the meeting after it. I really do. I think that central banks around the world are really coordinating to go into rate cutting. We're expecting 182,000 jobs, 3.9% unemployment, and plus 3% wage growth. Of all those numbers, the most important one is probably the wage growth. If that number comes in at 0.2, that's going to be a really bullish move. 0.3, I think people are going to be okay with it. They're going to be okay with it. 0.4, there might be a little issue with it, but I think that's going to be the big number. We'll have to wait and see what happens tomorrow. Expect there to be a gap tomorrow. I think maybe 1% is a little much. We're not crazy volatile right now, so maybe 0.5% to 0.75%. I think that's where we're likely going to be. I think if it's a gap down, I think you want to be a buyer. I think if it's a gap up, I think you probably want to wait. You know, Fridays have a tendency to hold on to gains. They just do that to go strong into the weekend. But if we gap up 1%, I don't think we have much more left in us. I just think we hold those gains, maybe sell off a bit. So for me, I would be much more excited about a gap down on entering bullish positions than a gap up. Well, that is it. I will update everything tomorrow after the market closes with the trading room, and we'll update everything and get ready for next week. Goodbye, everybody.